Hey everyone, thank you so much for joining us. Tyler, thank you for DJing. I'm Jen, and welcome to another episode of Blockchain Banter, Trading Crypto. We've got Keith Allen here, trader and co-founder of Material Indicators, along with Crypto Corio, data scientist and narratives trader. Tyler, our DJ, DeFi farmer and trader, and Dr. Mark Richardson, project lead at Bancor and CarbonDeFi. Welcome, guys. Thank you so much for joining us once again.
Thank you, Jen.
Thanks for having me.
Yeah, absolutely.
Thanks. Happy to be here.
Thank you. So I guess a couple of things we can maybe just kind of start it off. Keith, I had noticed you tweeted maybe a couple of hours ago, not what BTC bulls want to see. So maybe you can start us off a little bit with what you are seeing.
Well, yesterday I tweeted kind of a broader analysis, and I was actually been kind of preoccupied. I was in the hospital waiting room all day with my dad having surgery, which, knock on wood, so far so good. But over the course of, like, I don't know, 3 hours, I kind of managed to formulate a thought and an analysis to crank out as a tweet that really identified what I thought was what was happening here within the range. I've said for months now that I felt like, we hear a lot of arguments for the bull market, because of course we've had this huge run since January, but we've yet to have a confirmation, a validation of a breakout. And for me, I want to see full candles printing above the 100-week moving average, which is yet to happen. And I also felt like the 28.3 level was really the last line in the sand. That's a little bit lower than where the 21-week moving average is. I have some I guess horizontal lines and diagonal lines are relative to the artist, but that's kind of what I was looking at as the line in the sand. Well, one of our indicators, named trend precognition, is a really, really reliable algorithm, and it's taken me. We've obviously had it out for a while now, but I will tell you that like everything else that we offer, we tested for years before we offered anything, and even at that point, I probably worked with it for 2 to 3 years before I really had the confidence in it that I do now. It's an indicator that works well. It's a momentum indicator that indicates trend reversals, and it works best in higher time frames. And I woke up this morning to a short signal on the monthly chart. Now, a lot of people, especially newer traders, think when they see a signal that it's a straight line, and it's not. Anybody who's traded for more than 10 days knows that there's movement in the market, and there aren't straight lines. And it's worth noting that these indicators on TradingView do have a full candle lag before they print, so it's a tentative signal. But for the moment, I'm looking at it as something I'm paying very close attention to. So I think that if this signal does not invalidate, and the 32K level is my invalidation on it, if it does not invalidate, then we could see a grind down that would be below the July high, which obviously we're already there right now. Within the past few hours, we've watched price degrade quite a bit, seen some market selling, some movement of liquidity in the order book, and we just had looks like we just had a at least a temporary bounce from that level. So we'll see what happens from here, but I'm definitely paying attention to that signal. We talked last week a lot about removing your emotions from trading, and as I alluded to, it took me a while to gain the confidence in using these algos, and it's not because they were hard to learn or that they were not accurate. It was that as a trader, I had to teach myself that and make myself believe and understand, and the data doesn't lie, that the algo was making better decisions than I was. So even though you know, we all have a tendency to cling on to that last hope. I've trained that muscle to not do that and believe in the tools and the data that I use. If you don't have, you know, and I'm not saying that this is the tool that everybody should use. I'm saying you need to find tools and data that you have confidence in, and you need to believe in them and let that help you stop making emotional decisions.
I'd say also like being in the right groups here is huge. Like I joined Keith's Material Indicators Telegram weeks ago, and everybody in that group seemed pretty bearish. I mean, not like doom posting bearish, but like not convinced of that, you know, like you said, convinced of that breakout. And it's helped me quite a bit stay grounded. Keith, I wanted to ask, like, how often or how serious do you take sort of psychological barriers? Like 30, obviously bulls and bears are fighting like hell over this 30,000 you know, price with Bitcoin. Like how serious do you take that psychological I guess like milestones with price?
Sure.
Yeah.
This is where I let the liquidity be my guide. I've said frequently, for anybody that's followed any of my content, that liquidity equals sentiment, right? So it doesn't matter where the lines are on the chart. It matters where the liquidity really is at the end of the day. Now, when I have confluence between the lines on the chart, I know a lot of people don't believe in technical analysis. I still do, and I still use it. And when I see confluence between my TA and the liquidity in the order book that I'm using in fire charts, then I really have the most confidence. But you know, when you see money stacked, you see liquidity stacked at a level at 30K, at 25K, at 10K, you know, those all started out as psychological levels, but over time, many of them earned some, you know, some technical, I should say, you know, to be a technical indicator because of the amount of consolidation that happened at those levels over time. I was in a discussion with somebody last week who said, you know, how can anybody think that the 12K level is a possibility? You know, I see 13.8 or 14K, but how is it that the 12K is a possibility? Well, the 13.8 14K level was the peak. There were two weekly candles in a period of about 3 years that hit that level, but we had literally over 2.5 years of consolidation between the 10K level and that 12K level that acted as the ceiling before we actually had the breakout into the 13 and then boom, quick up from there. So I do put value on the psychological levels when I see the liquidity there.
Right. I hope your dad's okay too, by the way.
Thank you. I appreciate that. He's doing great so far.
Good. Okay. Yeah. One more question. This is for anyone on the panel. I'm always interested in like how people are managing like their stack, like their trading, you know, whatever they have allocated for trading. Like I personally, if I see like a really convincing move, I'll go in much heavier, I'd say, with size versus, you know, other moves where I'm not as convinced on, but I still want some exposure to. But, you know, it's for anybody. I know, Corio, you're like a narrative trader. Mark, I know you do trading as well, but just always interested in people's strategies regarding size.
Yeah, I think I'm looking to pick up. So yeah, I'm pretty well aligned with Keith, actually. Like, I think that at least the 12.5, like if the market turns around, like that could be reached, but there's like no rush, right? Like if you want to put in, if you want to put in orders for Bitcoin as it capitulates, you've probably got some time. I doubt we're going to see sort of a catastrophic, 50% drop in a couple of days or something like that. But I do think that the 25K level, like we could easily see something that looks like like a Bart Simpson type pattern start to play out, since like if you have a look back in around about the like mid-June sort of levels, when we touched on the 25K support level and sort of bounced really quickly up to 30K. I would expect that probably a dramatic drop back down to 25 could actually happen. I'm not saying that it will, but it's the kind of thing where if you weren't patient enough and it bounces off that level, you might miss it. So, for example, if I was trading this on Carbon, I would probably put a buy on BTC at 25, and then an immediate sell, so like a simultaneous sell to the upside at 27.5, just because I see a lot of confluence in that region. And if you want to see what I'm talking about on the charts, if you come back to, for example, mid-March, you'll see that there was a little bit of volatility around that 27.5 level. So I do think that like if we did come down dramatically to 25, we would probably see a rally back up to that level before capitulating further down, if that's what was to play out. But yeah, my confidence level is pretty high that we'll be coming back down to 25. I think if we do, we'll probably see a relief rally back up to 27-ish, and then we'll wait and see. But I'm fairly confident that we'll be seeing sort of seeing the same sort of price levels that we had in December of last year. Yeah.
Mark, do you think that 25 will hold? I mean, I know you're expecting at least a short to midterm bounce or some consolidation above it. Do you think that ultimately it holds?
No, I don't. I like I said, I think it'll be a relief rally. I don't want to call it a dead cat bounce necessarily, because that suggests like a slightly more dramatic event. But yeah, I do think we'll see a relief rally because I know that there is still a lot of like bullish sentiment on the Bitcoin side, and justifiably so. Like you said, it's been a pretty good year for Bitcoin already. So yeah, if it comes down to 25, I think it will hold briefly. We'll have that relief rally, and then I think it will drop a lot lower.
Yeah, I agree with you, and I think that Bitcoin bulls are, and myself included. I've had my eye on the macroeconomic picture, which is why there's some bearish overall macro sentiment, but there's no denying what's been happening here for the past, since the beginning of the year. In terms of 25K, that was a big level. That was a big psychological level, but we also had quite a bit of consolidation and drama around that 24, 25 level earlier in the year. And I would say that, I'm looking at a 6-month view of fire charts of the heat map right now. And I wish hey, Elon, if you're listening, one day, if you put video in spaces, we'd really dig that.
Keith, if you tweet it, I can pin it.
Right. Okay. I'll do that while I'm talking here. But we had some liquidity building in that 25K range, and in the middle of July, a lot of it disappeared. It disappeared from 25, also from the 22.5 level, and from the 20 and from the 20K level, and it moved up really into closer to the active trading zone. We're starting now that we have neared this 28 level. We're starting now to see some liquidity build in kind of a ladder up from 25, but it had faded, which is why I think people started to gain some more confidence in the mid 28s. But we'll see how this thing plays out. The one thing that everybody has to remember is things change, right? And crypto, it can change on I was going to say on a dime. It can change on a Satoshi. Things change quickly, so we have to wait for things to evolve. If we move down to 25, we got to see what happens. From here, it's easy to say, yeah, I think we'll consolidate a little bit, maybe we'll bounce, and then we'll go back down and test 20. I think all of those things are possible, but we also have to leave open the possibility that things develop, candles develop, and see how things shake out.
Corio, what is your take on Tyler's original question here? And thank you, Mark and Keith, by the way, for sharing all of that. I wanted to ask Corio, Tyler, your question was, how do you, kind of decide how much you're going to allocate into certain plays, right? When you notice a new narrative coming in, What's your general take on that? Is there a rule that you go by? Is it the strength of the narrative?
Yeah, so I think this is a key question that Tyler asked, and I think one of the probably the most important factor for the traders is the size that they put, because ultimately how much money you make or you lose really depends on the size that you put. You can have a perfect timing with with having the asset that you know and that's going to perform well, but if you don't put enough size, then the market is going to go up and then you make little profits. And so that's how actually a lot of people in the bull market, they don't make a lot of money because maybe they're conservative. They think, okay, that's overextended, so it should come down. You don't put enough size, it goes up, up, up. The higher it goes, the less you're comfortable putting size. And so that's how easy it is to actually underperform the market when things are bullish. And when things are bearish, of course, we are fearful, and we always think that it's going to go more down. And again, you might miss the bottom, and then actually you were there, you were on the charts, you had the opportunity to buy, but you don't buy because of fear, and it can be the pick of bottom, and it goes up. And so ultimately, the position size really determines your performance in terms of trading and outperforming others, etc. For me, what I'm looking in terms of narratives, in terms of position, first of all, it's one thing that I consider is this a short-term trend or a longer-term trend? If it's a longer-term narrative or trend, obviously you have time, and so you don't need to rush it. You can scale in your position. Usually, the more sustainable, longer narratives take time, and so there will be dips, there will be ups and downs, and so you don't need to put. I mean, it also depends on your time horizon, right? If you are like an investor or if you're a trader. Personally, I'm not into short-term trading, like 1 or 2 days or intraday, but I'm not neither an investor in the sense that I don't hold positions for a month. So I usually, I'm kind of a swing trader with like few weeks horizon, where if there is a big dip, I would buy, and then if it goes up really in a strong way, I would sell and then try to buy lower, etc. So for me, in terms of position size, what I'm looking for most of the time is two things. Because of the correlation of the markets, first I'm looking for overextensions of the market in either direction. But if, for example, for some reason, as we saw many times in the last year, if there are Bitcoin, for example, and Ethereum are going down and they are bringing everything down, then this is a very kind of golden opportunity because everything is correlated and the negative catalyst is strong. So this is a good opportunity to buy the dip, independently of what you want to buy. And now that's where narratives come into place because, okay, that's the dip. And now the better you're at choosing the right asset, then the higher your reward would be. I don't necessarily agree with the consensus of the rotation here in that sense that, okay, when things are a bit, uncertain, people allocate more to larger caps and then slowly rotate to Ethereum, mid caps, and then altcoins. I think for me, again, it comes back to conviction and to the position size. If there is a good dip, the better thing to do for me is to buy the assets that are maybe more volatile, that have higher chance of going up, versus just buying Bitcoin because it's a fearful environment and you don't want to risk it. But that ultimately comes down to your experience and to how confident you are of what you are doing. And again, here position size is key. So that's why, for example, I never use leverage because I don't want to be liquidated. So I'm more comfortable buying the dips with the assets that might be smaller caps, but I rather hold them until, even if it goes down, I hold them until the market recovers, and I'm not worried about any kind of capitulation or anything like that. So the way I see it is, if there is an overextension of the market, and if there is a kind of a strong new negative catalyst that, for example, we are seeing now with Curve. Curve is a good project. Aave is a good project. We know that these have good futures. Now, there is a short-term event that is happening that is causing them to dump. Maybe for those who believe in these projects, this is a very good opportunity. It mostly affects for now those projects. So if you're a believer in Curve, it's kind of overextended in the downside compared to the rest of the market. So this could be an opportunity, for example, in my style of trading. So that's how I approach things. First, look for overextensions on the downside to buy the dip, and then second, what do you buy? Then this is the narrative that you believe in, and how much size you put, and how much diversification you want to put. Just adding a note on this diversification, I think is really key because again, coming back to Curve, maybe for the more conservatives among us, we are looking for strong projects with fundamentals, who have revenue, who have good tokenomics, and I think Curve, for example, ticks the box on many of these things. However, as we saw, these things can still happen to strong projects, and so ultimately, you have to have conviction, and you have to see these as opportunities.
Yeah, speaking of Curve, I just pinned up to the top one of your tweets, and you were saying you were so impressed by how quickly someone reacted to this, and I think this kind of comes back to the emotion and eliminating that from your trading strategy, right? So you had said it's one thing to hear the news, it's another thing to immediately react to it. But then speaking to the diversification, you said you were even more impressed by the amount, like their exposure to this. So you're echoing what you had kind of tweeted yesterday, right?
Absolutely. So that was really impressive. So this Blur guy or girl, I was really impressed because first of all, the total size of like the Curve convex position that he had on his wallet was just less than 1%. So he has yesterday I checked 25 million wallet, and this was around 250K. So I think for the vast majority of the people, they wouldn't even bother, touching their position because they would say, okay, what is 1%? Even if it drops 50%, it's like a 0.5% drawdown on my portfolio, and that's not really going to affect me. So they wouldn't do anything. And then there is also, you would say, okay, maybe actually I will time it in a bad way and it will bounce and I will miss, and so you don't do anything. However, I was really impressed here because it's more than anything, it's the discipline of a good trader. That okay, there is something, there is an exploit. This could have consequences, and you hear the news. But again, it's very hard to actually be very fast at reacting, and I think it was a perfect example of a really professional kind of move of immediately reacting to something that you would believe would have consequences, although this is very, very negligible in terms of what would do to your portfolio. I think I do a lot of observations on people's wallets on chain, etc. And for many people, there are like in a weekly basis, you can many times see like 20-30% drawdowns, and some people are comfortable with that. But that specific example of cutting a very, very small loss, it's showing the discipline and the conviction and the habits of a good trader. And so I was really impressed by that.
You make an excellent point. Like you, I'm also very conservative, and I don't use leverage. And I think a lot of people overlook position sizing as really a simple and fantastic form of risk management. We discussed that in our group quite a bit, right? When people try to figure out, they're setting stops and they're getting stopped out, so frequently. A lot of times these trades just need to evolve, and you need to let the candles develop. And if you limit your exposure, by managing your position sizing methodically, then that ends up being a great risk management tool, I think. And many people don't even realize it.
They should be stressed, right? I've had a lot of conversations with people that are like trading with leverage, and I'm in Corio's boat here, by the way. I have traded with leverage before, and maybe I still do occasionally, but I kind of know that it's a dumb idea. And the people that do it frequently have often asked me about, hedging that risk, and honestly, it kind of doesn't make a lot of sense to me. The best way that I think that you can manage your risk is to just bet with less, right? It's there are sort of fancy products that you can use, but really, like, at the end of the day, you can prove mathematically that your risk profile can be reduced just by committing less capital to that decision. And I think that's a really important point, and people should take that a little bit more seriously than they do.
Yeah, and to add on to that, I think, as many people, I started with leverage because, it's very tempting to use leverage when you think about the upside. But I was liquidated, and then I reconsidered things. And I think a lot of people don't really they don't really think deeply about how much money they want to make in the crypto markets and how they would need to trade in order to achieve these numbers. I think if people really start to put the numbers in an Excel file and say, okay, I want to make 10% per month, 20%, 5%, and then they say, okay, then how can I achieve that? Then they will really, most of them, you'll see that they don't need actually any kind of leverage. If you, for example, trade, it's most of the weeks and months, even an asset, a very large asset like Ethereum, does easily like 10%, 20% moves in a month. And so if you take a bit smaller caps, like something like Matic, something like Curve, it's really not unlikely to do like 30% or something like this in a month. Of course, it could be positive or negative, but what I'm trying to say is, if you set your objectives, then you would realize that, okay, I actually don't need to trade with leverage, because what I'm trying to do, the thing is already doing 20% on its own. I'm trying to do leverage. What numbers am I trying to achieve? And if I want to do, like, I don't know, 2x per month, is that reasonable? And if this is my goal, then I'm going to be a multimillionaire in 1 year or 2 years. Is this something that is realistic? And so I think when I realized all of this when I really started to put the numbers and see, okay, how much I want to make, and what are some standard moves in the crypto markets. And this is on the quantitative side. And on the other side, when you look at it statistically, think about the downside. Like, you can win 99% of the time with leverage, but if you want to play this game for long term, and you want to be there in 10 years, 20 years, and if you think about it, you just need to be liquidated once for you to get out of the market and disappear and join the majority of the people who don't last long in the markets. And so, and if you think about all these things together, you would realize that actually leverage doesn't make much sense with the a lot of downside and little upside.
Keith, you want to add to it? I see that you're unmuted.
I was just going to, you make a great point about longevity in the market. Pretty much everybody that jumps into trading, especially younger market participants, they have dreams. We all do. I think when we all started, we had visions of grandeur, right? And then you see these guys posting astronomical gains, and you go, oh, I'm going to do what that guy does. And then, this week's example of Bald, I think, is a great example of how quickly things can go wrong. And to have longevity in this game, you need to learn the discipline. You need to build habits and muscle memory to, have your plan, be disciplined, not be emotional when you trade, and to really understand what is at risk. The people that are in this the longest aren't the ones who are moon boys screaming at the top of their lungs, selling you everything that they can sell. And I would say that if you are, if you're listening to this, and everybody has their favorites who they follow online, or whether it's YouTube or Twitter or X or whatever the hell it's called this week. And I would say that if you gravitate towards the people who are teaching, gravitate towards the people who are showing you not just what they made, not just showing you the "I told you so" post. Hey, look what the call I made, a week ago. But the people who are showing you the charts and the logic and the rationale behind the decisions and the calls that they're making, and who are teaching you, the ones who are showing you that they made 300% last week, and they have a big goofy face, on their thumbnail, for each video. That's not the guy that you're going to learn from. Find the people that are making data-driven decisions, who are teaching you what they're doing. I'm a big believer in the teach a man to fish principle, rather than give a man a fish. Right? Teach a man to fish, and you feed him for a lifetime. And you need to learn rather than just follow people blindly in this game. A lot of people get scammed. So know what you're doing before you push your chips across the table, and manage your risk, and you'll have longevity. It's the people who are here year after year, and after 10 years, that are the ones that are ultimately making money. A lot of people who are showing you astronomical numbers aren't going to be around a long time.
Yeah, I would also say I always take note of who is bearish at the top and who's bullish at the bottom. Like once Bitcoin broke that 20,000 USD support zone, I don't even know. That felt like a long time ago, like maybe January of this year. Everyone's screaming that the sky is falling, but there's always a handful of those people. I think, to like what Keith is saying, like there's people that can see when it's oversold, right? Like and there were some people out there saying, no, there's no way we're going to be sub 20,000 for much longer. And I always like to follow those people, and I always take their calls a little bit more seriously than others, because you got to be brave to be saying Bitcoin's going to dump at 60,000, right? Like you don't hear a whole lot of that when you're in like the heat and the froth of the market,
Right. And the words never, always, and guaranteed tend not to age well in this game.
Exactly.
One point I would like to discuss and hear other people's opinion is about the calls of other people on social media, etc. Tyler mentioned about that. Personally, when I started my journey, I was looking a lot for what other people are saying. And the more I started to really actually kind of backtest their performance, I realized that at any given time, some people will have good calls, and then when market conditions change, they will have less good calls, and some other people will have good calls. Typically, for example, when the market is bullish, those who have a more bullish bias, they will provide good calls. And when we saw last year, actually, most of the bears, they had better calls than bulls, but it doesn't mean that they are this is also something that I've observed on chain. Nobody's always doing great. Everybody at some point, given their preference and how they trade and the market conditions, they are more comfortable with certain market conditions, and they do well in these conditions. But if you just blindly follow them in any kind of market conditions, you would do pretty bad. For example, I think everybody knows Capo here, probably, or have heard of him. You would, if you followed Capo last year, for example, in the peak of the bull market, yes, he would have saved your money. But then on the other side, when we were at near 16K, he was still giving like 10K calls, still looking for lower prices. And I'm just taking an example. I mean, any other person is also has good calls and bad calls, myself including. So with time, what I realized is that for me, and I'm coming back to what Keith said, is for me is better to develop my own system and not being influenced with anybody's opinion or what they think, etc. Because I don't have any control of, or I do not know how Keith, for example, thinks or his indicators. I don't understand them. So, and he has years of experience working with them. He might express a view on Twitter. He might say I'm bearish, but for me, I don't know how to react to that because he understands when, as he said, for example, the market conditions change and you have to adapt to that at any time. So, and he would do it, but I don't know. You know, I might just read one of his tweets and then I might short, and then and then the other one day after he might do another thing based on the new information that he receives. So for me, the solution has been to actually develop something that that I understand well, my own system, and then just trade based on that and without any consideration of what other people are saying. I missed a lot, for example, in the 2023 rally because I was still listening not to the traders, but I was still very influenced by the macro guys, and every macro thing that I was reading was so bearish. I was like, okay, this is certainly actually a kind of dead bounce, and how possibly can we go up when everybody, there is the economy is so bad, inflation is so high, and companies are firing people. This cannot be a real rally.
I'm with you on that. I actually echo pretty much everything that you said, and I had the same feeling, and I think that for me it was an opportunity cost, right? I really held my was protecting my stack at that point, and really through much of this rally since January, I was reluctant to expose myself too much because I felt that that dump was coming anytime now. And then I realized, hey, I got to trade what's in front of me. In terms of what we were saying about influencers and developing your system, I echo that 100%. I started out like a lot of us do, finding people that I had confidence in and that I was learning from, but I keep my head down. I follow. Let me just say that I frequent very, very few pages, and I develop my own strategies and my own plans and my own theses. And I will, time to time, check somebody who I trust, somebody who I have confidence in, and see how my analysis may or may not align with theirs. And if it doesn't, then I go back and I look and see if I have more confidence in what I've done, or if maybe I missed something. Just makes me take a second look. It doesn't make me change my bias. It just makes me analyze mine a little bit closer before I commit to it. You really need to understand what you are doing. And as Corio said, don't follow people blindly. Don't follow me blindly. Don't follow any of us blindly. Know what you're doing. And one last point on that is, we talk about the people who are quote unquote self-proclaimed gurus and influencers in this space. Follow the people. Nobody gets it right 100% of the time. Some people delete their content when they were wrong. Follow the people who own their mistakes and don't delete their content.
Is Capo still bearish? I haven't been following him.
So he hasn't been posting for a while now. I think he admitted that he wasn't correct in the last month, but I think he's waiting for some bearish events to come up again.
I don't mean to poke fun. I mean, like all the panelists have said, we've all gotten, big calls wrong. It happens. But as Keith and Corio said, it's about time in the market, and that has a lot of value because you really never know when you're going to hit the right call with the right size at the right time. So yeah, that's kind of how I live my trading life day to day. Also recognize if it's bear, if are you in a bear market or a bull market? I think that's something people don't really want to recognize. I tend to get more conservative, pull back in bear markets, but also if there's a good narrative like Unibot, I saw a very good narrative there and put a little bit more size in than I normally do, and obviously it worked out pretty well. So you know, it's like Keith said, it's really it's an instinct thing, and you're not going to get there without putting the time in.
Well, you know, and it's also, you know, speaking of what the market, what the macro market perspective is, there's a big difference between whether you're building a position as an investment or if you're trading, right? If you're trading the short-term trend and you're looking for a quick scalp, that's way different than building your long-term investment position. So time frames matter.
I actually think that Corio said this last week on our call was, you know, I think Tyler, you had asked what sort of time frame, how do you kind of time these narratives? What do you expect from them? And being in the bull or a bear was something that you take into consideration. If I'm not mistaken, you were saying that in a bear market, people are not so long on these sorts of narratives. They're quicker to take profit, so they're shorter lived. Am I correct in saying that, Corio?
Yes, absolutely. So in the bear market, narratives usually, people are fearful, so they take profits much faster. As soon as something pumps, they might think, okay, this might be the end of it because the market conditions are not still very favorable to go risk on in full mode, and they would then just quickly take profits. Where when the market conditions are, for example, similar to those of 2020 and 2021. Then macroeconomics is good, inflation is good, and liquidity is coming. So everything is actually in place for prices to go higher and higher until some extent. So you are more comfortable just sitting on whatever you have and just waiting and just doing nothing. So yes, that's the case.
Mark, that was something that you said yesterday on our alpha call. In response to what Corio was saying, you were saying sometimes, depending, it's better to just not do anything. Otherwise, you find yourself over trading and becoming too anxious.
Yeah, I mean, it's like deciding to do nothing is it's a totally valid decision, and you know this is it's kind of, you have to realize that the situation that you're in trading, in you know, in your career, in life, in every decision that you take, that you know, doing nothing, right, not doing a thing is always the same, like you're taking a risk the same way that if you decide to do that thing. You know, like over the course of the last few years, I've met so many people that are like, oh yeah, like I'm not really, like I don't want to do cryptocurrency stuff because it's like too risky, or like I don't want to do stocks because it's too risky, or I don't want to do, you know, whatever because it's too risky. And the counter argument is that sometimes doing nothing is still risky. Like, you know, what are you comparing it to? There is no sort of null hypothesis in this situation. You're playing whether you like it or not. And deciding to do nothing is still a decision, and you can keep hitting that do nothing, you know, button for the rest of your life. And I don't think that's necessarily a good way to play. But at the same time, there are people that play too often. You know, like sometimes, you know, listening to your friends who are like, yeah, I don't do anything, like that sometimes is the most expert move. You know, it's there are, I don't know why it's so polarizing, where there are these people that like decide never to get involved, and then there are these people that involve themselves in literally every single thing. It's not there's no need for that kind of polarization. I think people ought to explore the middle a little bit more, where they do things when it makes sense, and then they decide to not do things when that makes sense. It's a much, you know, I think more educated position to have of these things, and it's surprising that that is such a seldom held belief.
Yeah, I would say sitting on hands is a strategy, and out is a position.
Corio, you wanted to add something as well. Go ahead.
Yeah, I wanted to say actually last year, in the first half of the year, I actually didn't trade at all. Like I didn't even place one single trade. It wasn't because it was my perception of the market or because I knew that the things will go down. It was just that I was really busy building some stuff related to crypto, and I was doing my own little strategies and backtesting. And I knew that I don't have any kind of edge in this market. And so I just wasn't trading. And that turned out to be the best thing that I could have done, because obviously if I wanted to trade, everything was going down, and I have a long bias, so I would have lost money, a lot of money. And so, but as Mark said, it's one thing to not do anything if you are not into markets. That's easy. But it's really challenging to not trade or not do anything when you're actively in the markets, like us. I think all of us, when you're involved in the markets, when you follow, when that's your big part of what you do on a daily basis, not taking any action is really not that easy, because you're taking all that information, different news, and then you have your biases, and you have your strategies, and it's very hard to do, actually, I think. But
It definitely is. Yeah, I didn't mean to make too light of it, but what I mean is like maybe even just figuratively, like draw a little button for yourself on a piece of paper and put it next to your keyboard and just write do nothing on it. Like just keep reminding yourself that that's a decision, and it's in some situations it's the best possible decision. It's not that there's always sometimes the risk versus reward is just too bad. And it's better to like decide, like own that decision that that doing nothing is something that you've considered and accepted, and that's a totally reasonable thing to do.
I think this also kind of goes back to, we were talking about who you're following on Twitter and things of that sort. And Corio, on one of our previous calls, we were discussing like, how do you know when you're too late into a narrative? When it's already been played out and you just are better off not doing anything. Let those who got in earlier than you did ride that out and profit from it, and you just kind of sit back and wait for the next narrative. Keep your eyes and ears open for that. Maybe it's one of those situations.
Yeah, absolutely. So more recently, for example, I've missed on two of the big things that happened recently. One of them is the Telegram, like both like narrative or whatever, Unibot or these kind of tokens. And then the other one was more recently, it rug pulled, but everybody was talking about BULL for a few days. But I'm very happy and very comfortable to miss those, because I think it's very important to have a lot of data and to have a better understanding of, okay, what can we expect? How high can a price go of any token in 1 week, in 1 month, in 10 days? And if you see a lot of examples, then you become then you can actually start to make better and better decisions. So, for example, for me, when I see something like that does a 5x, 10x in 1 week with low market cap, low liquidity, of course I'm really completely okay to say, okay, I missed this, even if it has happened a lot of times that it even goes higher, like 3x, 4x higher, but I'm not comfortable. It's just not my style of riding something that is up that much. I'm just comfortable saying, okay, I missed that one. And either if I believe it's something that I'm comfortable trading, I would wait for a pullback. Either if it takes 2 weeks, 3 weeks, I don't care. So usually, what I personally do is I place price alerts. I use TradingView, so I don't have to be actively on the charts. But yeah, timing is very important, and there's a lot of things that you're going to miss because there's so many things, so many projects, trends, ecosystems launching, and so you have to be comfortable with missing. And I think in general, I would say if you're a trader, you have to be very comfortable being discomfortable. How would I say that? Being not in comfort, meaning that you would miss it in a lot of things. You would lose money doing bad trades. You would see others doing better than you, and this is really part of trading, and it's very frustrating. But if you if you're not comfortable with that, then it's going to take a lot of energy out of you. And as Keith also said, you have to actually position yourself and everything you do in trading in a way that you can last long enough. Now that's how you manage risks, but that's also how you manage your stress, and that's also how you manage your frustrations and everything that you miss, etc.
Keith, I see you're unmuted. Did you want to add to it?
Yeah, I would say, chasing, falling into the trap of chasing the euphoria rarely ends well. Okay, look at what happened with XRP a few weeks ago, right? There was an SEC, actually a court ruling, and Coinbase added it, and it had a 100% range on that candle that settled at 70% on the day. Straight lines rarely end well, right? There's going to be a retrace at some point in time. Now, with something like XRP that has some fundamentals behind it and some history, you could then look at that coin and say, all right, what really looks like fair market value? Let's look at the charts and see where I might find a level that it would pull back and be a good entry. If you're going for those quick hits, right? If you get it early, you get in early, you get out quick as a quick scalp. That's one thing. But if you're chasing the euphoria of that move, chances are it's not going to end well for you. So if you're not sure about the timing and where you are in that move, I would say the next best thing you can do is look at the risk reward. How much upside does it really look like there might be left before there's a retrace, before you enter that position?
I need a clip of Keith saying that and just have it on standby for whenever I'm about to buy the top of the daily candle.
I will create that and put that out there as a clip for all of us.
Seriously though, I've been doing this a long time, and I still sometimes find myself not buying the Pico top, but I'll buy the top because of emotions. It's still it's easier said than done. And yeah.
Hey, you're not. Hey, I talk a good game. That doesn't mean I don't get. I don't make mistakes myself as well, right? That XRP move, I literally had tweeted, I wonder how long it's going to take Coinbase to add XRP. And it certainly wasn't because of my tweet, but I didn't realize that they were as nimble as they were. And literally within hours, it was added. And I saw maybe the first five-minute candles printing. And I was like, holy shit, it's going crazy. And I just did a small position, because that's how I manage my risk, is with position size. And it shot through the roof. I had split TPs. It took two of them, and then it started to retrace. So I really didn't help myself. I would have been smart just killing the whole thing fast. But, now I'm sitting there with half the position that I feel like, over time is probably going to be okay. But if I was smart, I probably wouldn't have done any of it. If I was even smarter, I would have had faster fingers and just took the money and ran. But sometimes you see something that looks like, it looks tasty and you can't help yourself. Try to make yourself a note and discourage yourself from doing that.
I pulled what Mark was talking about and I just sat out. That was my strategy for the Ripple.
Well, that was a good move.
Euphoria. Yeah.
I think it comes down to something that we were saying. Oh, sorry, Tyler, really quickly. We were also saying that sometimes it's, it can be really difficult it can be really easy and really difficult at the same time to make money in this, depending on how you're playing it. But preservation and actually reserving that sort of capital and taking those profits and turning them into realized profits and holding them is a whole nother ball game, right? So it kind of goes into that data and analytics. I brought this up. I actually shared a clip of Crypto Choreo from our last week call, and Keith actually speaking to the actual tools that they're using. And it's like tools and analytics and data over that euphoria, right? And if we don't all have that, Corio, you said you took a year and didn't do any sort of trading because you didn't have an edge in this market. You've created this Dune dashboard. You've shared it with all of us. And I think that was the point that I was trying to make in my previous tweets also, was that we're not all experts, but we can follow those that show like the good, honest, this is my call. I might have been right. I might have been wrong. Use those tools that they're using and kind of understand where they're making these calls, you know, where that's all stemming from. Go ahead, Keith. You wanted to add something.
Oh no, I agree. I agree with that. I think I posted something this morning, you know, along those lines of finding tools and data, whatever it is. Doesn't have to be what I use. You got to use what you have confidence in, but finding the things that can help you, that you can rely on, that make better decisions than your gut, because there's too much emotion. I feel like this is an ongoing theme for this show. We discussed it last week, and it's really an important one. Do what you need to do to get emotions out of your decision making and trading. That's the bottom line.
Yeah, I think one other thing before we end that I really want to talk about is, you know, we had spoken earlier about having a sort of plan. You know, obviously the market changes, there are different moves, and adjusting your plan to that isn't necessarily a bad thing. But I want to bring it back to what we were saying originally with, remember your end goal for actually getting into the market, right? Like Corio, I think you had brought it up, and Keith, you had kind of harped on it a little bit, is remember like what you're actually here for. And this came up with the leverage conversation. So Mark, you were speaking to this as well. But I think that's also important, not just like a plan for this one particular trade, but an overall goal for what you're looking to get out of this, why you're actually here and trading and making the specific moves that you're making. Awesome. Well, we are at the hour. So that went by really quickly. Any last thoughts you guys want to throw out there?
Be careful.
My thought is I need to spend some time with Crypto Corio and learning more about what he's doing. I've had a very busy week, but I'm really eager to climb in and get a better understanding of what you're doing, because philosophically, I think we're very aligned. I want to understand your data.
With pleasure, I would be happy to discuss more with you. On my side, there is a website that actually I would recommend people checking. It's called the calculator site, and it's you can actually easily put your start balance, the percentage that you want to make per month, per week, per year, per day, and then your time horizon. And it will tell you actually at the end of your time horizon how much money you will be making. I really suggest people playing with this, because coming back to what Jin was saying, you really should have a goal. You should have a goal of, okay, I'm in the markets because I want to make that much money in 2 years, in 3 years, and that's my starting capital right now. It would be $1,000, it would be 10,000, 100, whatever it is. And then doing that, you will, I think, I'm pretty sure people will better trade, because they know, okay, I've already, for example, did a good trade. I achieved my monthly goal, and I'm good for this month. I don't need to take leverage or risk or whatever. So play with that tool. I mean, that's one side. There are many other sites where you can actually do it on your own, on a Excel spreadsheet or whatever is easy. So go check these things and set an objective, how much you want to make, what's your strategy, and you would be more comfortable trading.
So do you use like the compound interest calculator on that, or is there a specific trading?
Yeah, I use, and what I try to do, now I have some data, so I say, okay, now based on the last year or the last 2 years, I know that on average, I do, like, let's say X amount of X percentage per month. It would be 10%, 20%, 5%. And okay, that's my performance, usually, at least the median, and that's my balance right now. And that's my time horizon. And so, okay, how much time do I need to get to 1 million, 10 million, 100K, whatever, for anybody? And then work backwards. Work backwards, meaning that, okay, you know that, okay, in 2 months you need to have that much, and then in 6 months you need to have that much. I mean, do that to have just a kind of a baseline, But obviously, trading is not very linear. Sometimes the market might range for a few months, but at least you would have a better, how can I say? You can quantify more what you're looking for.
Love that. That might be a whole show, Jen.
I actually just found the site and I tweeted it. So if anybody wants a quick, easy access to that site that Crypto Choreo was just recommending all of us visit, definitely go ahead. I can pin it to the top quickly. But like I said, we are at the hour. So I just want to thank you guys all for joining us. Keith, Crypto Choreo, Mark, Tyler, definitely love you guys being here. I hope that you will be back next week also. Thank you to all of our listeners for joining us. And yeah, I mean, if you want to know anything additional about Carbon, please reach out to me. You can follow Carbon Twitter, CarbonDeFi.xyz. Same with our Telegram. Keith, if anybody wants to know more about material indicators, they can follow the Twitter and maybe contact you directly, or how would that look?
Absolutely. Links in both the material indicators page at mi_algos and at my my personal page at K Productions, and of course on the website materialindicators.com. You can find us. I'm on every day here and in Telegram.
Amazing. And Crypto Choreo, I don't know if I pinned it today. I think I did. I've gotten in the habit now of pinning this Dune dashboard because this is what you took some time developing, and what I really kind of wanted to highlight when I was speaking to the professional traders in the space, developing these sorts of tools that some of us just aren't qualified to be developing ourselves. So again, thank you for creating that and for sharing it with all of us. Definitely give you a follow and check out the Dune dashboard.
Thanks, Jen. It's a pleasure being here and talking to you all. I would just add that I'm also working on a new dashboard, which would be on the ecosystems. Similar, not on narratives, but on ecosystems, on which chain is the liquidity moving, etc. So you can actually follow that on my Dune as well. So looking forward to the next week meeting.
Awesome. Thank you so much. And thank you for sharing. We also want to stay updated on the bot that you developed, because I noticed that you were super quick to get those notifications, right? With the CRV. I had seen your tweet, and I know that I saw some people asking, is this a bot that you're going to be sharing with the rest of us? So no pressure, but I think definitely something that I would enjoy staying updated on.
Happy to hear, and we are working on it, and we will let you know as soon as it's public.
Awesome. Thank you guys so much again, and I look forward to next week.